Hello and welcome back to the channel. Today I have a little bit of a different spin on something, and it's actually selling options. So selling options can be very beneficial if you want to create kind of a side income for yourself. It's like trading in a lot of things. It can be difficult as well. It's a little more confusing, but once you figure it out, it can actually be simple, and it can create a nice little side income for you because it's kind of more playing the long game, and it's almost like you're selling insurance. Insurance companies, their whole idea is they want your monthly payments every single month, and they don't really want to pay out insurance, when you actually get hurt. So selling options is kind of like that. I want to keep selling options and never really have my stop get hit or anything like that, or have the contract actually rip through whatever it is I'm trying to sell. And I want to just collect premium the whole time and just take advantage of something called theta decay or time decay. So in selling options, the time is on your side, and buying options, it's not on your side most of the time. So let's just kind of break that down real quick, and I'll try to keep it as simple as I can. Walmart had really great earnings and had a really good pop on that because of those earnings. And now we find ourselves out of the Bollinger Band. The Bollinger Band is the blue line. And just really simple, the Bollinger Band is kind of like something called standard deviations, two standard deviations. But essentially, you just need to know that 90% of the time, price is going to stay within the Bollinger Band. So when price gets out of the Bollinger Band, like we see here, right, you're going to have, more often than not, the price try to get back into within the Bollinger Band. And so this can help you out, like right here, right here. There's many spots. Just go to a chart, set up a Bollinger Band. This is in Thinkorswim, and go look at some charts, and you'll see how often it happens. So trying to take advantage of that, here we have Walmart, and I think long-term Walmart could probably be a good stock, but a lot of times what happens is you get a pop like this, a lot of volume comes in, you see all the volume, and then you're going to have a bit of a cool down here and consolidation, probably around this 144, 145 range, maybe touch off the 15 EMA once it gets up here, consolidate for a bit, and then go for a rip. So taking advantage of that with selling options, I would want to sell a call. And here I have my stop at 151.75. I don't really want to see the chart go over that. So when you're actually looking at, selling an option, if you want to buy a call, then you would want the price to go up. But if you sell a call, it's the inverse of that. So you actually want the price to go down. Just like with shorting a stock, you want to sell it high and then buy it back cheaper. If you don't quite understand shorting, check out this video. It's a really great analogy so that you'll understand it. I guarantee you're going to understand shorting after you watch this quick little video. But essentially, you're trying to sell something high and buy it back cheaper. And that's what you're doing with these options. You're going to sell the option higher, when price is actually close to this area, and you're hoping that price kind of comes down and goes around here, and you also have something time decay or theta decay that kind of makes the contract cheaper for you, and then you'll buy it back later at that point. So just to show you quickly how to do it, you actually come in here and you kind of look, okay, something close to on the money. This is how I like to do it, something closer to on the money. And usually you want to go out, about 30 to 45 days out. And that just really helps with theta decay. And then you go right here to sell, you right click, sell, and vertical spread, okay? You click that, and it's going to show you down here. And then usually I want to do like a $5 gap. So I'm actually going to sell the 150 contract and buy the 155. So we see here, the 150 contract is $3.07. But the 155 contract is only $1.34. So if I sell this at $3.07 and I buy a contract at $1.34, there's a credit there of $1.73. So that means I will actually get paid $173 because every contract is 100 shares. I'm going to put it up to 3, right? I'm going to get paid that when I put this trade through. So in Thinkorswim, what's really cool is you right click on this. So right click on that, and you go to Analyze Trade. And then this brings you to this funky screen, right? And then I already had this set up, so I'm going to delete that. But this is really, really great to analyze. Okay, I'm going to try to make this as quick as possible so the video doesn't go on forever. But the blue line is essentially showing you your profit. So look down here. So blue line, profit. So I'd make 525 on this trade if I let it go all the way till December 23rd, or the price came all the way down here, or something like that. But what's really great is I can see the red line here, and I'm kind of like, okay, that's my, kind of break even point. If we got all the way to December 23rd, this is where I would start losing money. You see how it goes down here, and over here you can see negative, right? And if I let it just completely go, I would lose $969. Now the purple line shows you in kind of more real time as the days go on, what you would lose at that time. So say right now I get into this trade, and then the price goes all the way up to my stop loss at 150, 175. I would lose $200. Say it dropped all the way down to 145, I'd be up 231. So the purple line gives you an idea. Now this is why I love selling options, and this is the most important part. Look at this number right here. It's the 151, and that's what I'm going to lose to 212 if the price gets to that. But watch how this adjusts as I raise the date. So we go forward in time. 214, 212, we start to go down. 210, 208. So my risk actually starts to go down as time continues on. So I get all the way to December 7th, and all of a sudden the price pops up here. I'm actually only going to lose 176. That's pretty great, right? My risk parameter is going down as time goes along. So I like time. Time's on my side when I'm selling the option. Now, if I go to the 16 and I look at the same one, 144, I was thinking maybe price will go to 144, 145. I see a profit of 234. Look, that's right here. Look how this raises as time goes on. 245, 250, 264. So I start making more money as time goes on when the price gets down there. So I have a scenario here where my risk parameter, my stop loss, is causing me less harm as time goes on, and my profit factor is getting higher as time goes on. That's a pretty great trade. So with selling options, time is on your side, just to keep it super simple. And when buying options, time is against you. I would need this chart if I was buying, right? I would need this to pop right away for me. Or say I bought a put because I wanted this to go down. I would need this to come down pretty quickly in order to actually make some money on that trade. Now, if it happened really quickly, then I could definitely make more. But because I'm selling the option, if the chart just kind of goes like this for a little bit and kind of consolidates here, I'm still okay. You saw my risk parameters going down, my profit factor is kind of going up. It depends, but time is on my side. I'm okay with that. If it ends up popping up here, you know what, I lost, but I lost less than I would have normally lost. With the put, if I bought that, I would need it to come down right away. And if it kind of goes like this and wiggles around like that, I'm just losing money every single day, right? And my risk parameter would keep going up every single day. So it doesn't benefit me there. Whereas selling the options, this is okay. The chart coming down this way is great. And the chart just absolutely dropping all the way down here is amazing. So I'm winning 3 ways out of the 4, whereas buying an option, you're kind of losing 3 ways out of the 4. The only way you're really going to make the money on buying the option is if it happens very quickly for you. But I'm hoping that this is a simpler way for you to understand how selling options can be a great benefit for you. You can take advantage of time decay or something called theta decay, and really the chart is going to work out for you a lot better in more scenarios when you sell options rather than buy them. If you want to learn a little bit more, you can check out this video on simple options, just to kind of explain the basics. I hope you have a great day. Thanks for sticking around. I'll catch you on the next one.